He joins us now, Head of Research and Trading at the Australian Stock Report, live in our Melbourne studio. Warm welcome to you. You're not surprised by this rally today. Indeed, you're saying it's about time we were on track for this. How far through it would you say we are?
Good morning, guys. Yeah, look, I think the rally is, well, not potentially just starting. We're probably about halfway through. Look, obviously there's been some macro risk factors that have subsided. The Greek acceptance of the bailout terms this morning, the China ructions that we saw last week, again, have subsided for the time being. Some commodity price steadiness as well. So I think potentially we move up to 57.50. So I just heard you guys saying in the lead up that we're not far away from 5,700. There might not be too much more in it, but still some further upside on offer, I think.
It's interesting you're characterising it as commodity price stability. That iron ore price, though, yes, it might have risen overnight, but if anything, it's been on a downtrend, and some are predicting further falls.
Yeah, and I would actually fall into that camp as well, I would say, Carson. I guess when I say steadiness, it's all relative. Of course, I'm comparing it to the 10% fall and then the 10% rise the following day that we saw last week. So that intense volatility, I think, has subsided for the time being, and it's providing investors a little bit of calm, I would think.
I don't know if you look at primary healthcare, but we were obviously just talking about this one falling 11% today on a market update of guidance, cutting its guidance for FY15 to 400 million from a previous guidance range of 410 to 425. Do you have a view on that?
I actually don't, I'm afraid, Ingrid. I obviously again heard you in the lead up and heard that it's off 11%. Look, a forecast cut like that was always going to have a particularly negative impact. Where it heads to next, though, yeah, it's not a stock that I cover in great detail, but obviously getting beaten up really badly today.
So is your propensity to be looking at health, though, with an offshore component, given the dollar moves, is that perhaps, at this point in the cycle, the better hedge to play?
Yeah, most definitely. So Cochlear, ResMed, and I can't quite remember the other one. It escapes me at the moment. But yeah, those companies with offshore earnings, significant US dollar exposure. Ramsey, that's the one. So yeah, look, with the US Fed putting the September rate hike back on the table last night, and still the chance that we'll get 2 rate rises this year, that will see the US dollar firm, Aussie dollar, of course, fall comparatively, and will definitely help companies in the healthcare space with offshore earnings. They are a little bit expensive, don't get me wrong, but I think that's a momentum play that traders should be on the lookout for. I think that's the thing that they should be looking at. And yet
the likes of a Ramsey with that overweight exposure as well, arguably into Europe, relative to its peers, I'll put it like that. You know, the euro ain't going up anytime soon, is it? I mean, in terms of Draghi is not going to raise eurozone rates for a long time.
If anything, more dovish.
Yeah, because they keep monetising the debt. They can't raise rates on that basis.
Yeah, no, they won't. I don't know what percentage the euro exposure is for that company, so I couldn't factor it in. But I think the US dollar earnings is still the overarching factor that will drive, you know, those companies with offshore earnings. And they've got to be quality companies as well. Don't get me wrong, but they are quality companies. They operate, for example, Cochlear in a niche market. They don't have too many competitors, only one other, and they stand to benefit from an Aussie dollar that I think will continue to fall. I see sub 70 by the end of the year.
Okay, might be worth getting a view on Rio Tinto as well, and some of these production reports we've had out today. Rio off by about 0.3%. It was sort of choppy at the start of trade, in positive and negative territory, sort of oscillating between. But of course, down now, cutting its iron ore shipments by about 7 million, just given the fact that we've had bad weather. What do you make of this? Is that significant to Rio going forward, or just a sort of immaterial decrease in shipments?
Yeah, I think overall it's pretty immaterial. The bad weather obviously can't be helped. Sam Walsh, as we know, wants to ramp up production. I don't think that will be something that will shift. Look, Rio Tinto, typically they don't give too much away in their production reports. They haven't again today. The June quarter was a strong one, but typically it is for the sector. So I don't think there's too much in it today. Probably coming off a little bit because of that annual production forecast coming down, but overall I think it's pretty material to what's going on with Rio Tinto. I think that the bigger concern, as Carson mentioned earlier, is that iron ore prices are likely to continue to fall. The supply and demand equation there still remains out of whack, and that's the thing that I think most investors should be focused on.
And Gina and Vale are coming to the party like never before. Watch this space.
They sure are.
Let's watch as well QBE. It rallies even though it's lost money on selling an asset. So is this kind of an open invite for them to keep divesting even at a loss? Quasi-fire sale style?
Yeah, I think so. I mean, obviously they don't want to sell assets at prices, you know, too far below their value, but it indicates that the QBE management have got things in hand. They're divesting non-core assets. They're focusing on their core competencies. Looking at the chart this morning, it looks technically very strong. It's about to break higher again. Probably we would rate this as a buy at the moment. Again, their offshore earnings, their US dollar earnings will help as well amid the falling Aussie dollar. So we actually quite like QBE at the moment.
So no more profit downgrades. You're absolutely certain this is it?
I wouldn't say absolutely certain, Carson, but no, I think the risk is to the upside. I think it's a buy at the moment. Yeah.
Okay. Let's hope you're right, Chris. Thanks as always. Australian
Thanks, guys.
Stocks Report, Chris Conway there in Melbourne.